Hey everyone, and welcome back to Am I Catching a Falling Knife? The podcast where we break down complex market moves into plain English, helping you decide if a recent stock dip is a true opportunity or just a really sharp edge. I'm your host, Dave, and today we're grabbing our gloves and taking a look at a familiar name in the travel world, ABNB, or Airbnb. This stock has seen a decent slide over just the last few days. Is it just a temporary dip, or are we looking at a classic falling knife? Let's dive in. Why the drop? Well, the dominant market narrative right now is this interesting tension. On one hand, we're seeing really robust current travel demand, which is great for a company like Airbnb. But on the flip side, the company itself has given a rather cautious second-half outlook. They're signaling anticipated margin pressures, which essentially means their profit margins might get squeezed. This is due to increased investments they're making and some challenging year-over-year comparisons coming up. And unfortunately, this cautious outlook seems to be overshadowing what were actually pretty strong Q2 earnings. Now, let's talk a bit about what Airbnb actually does for those who might be new to it. Airbnb operates this massive global platform that connects folks looking for places to stay and unique experiences with hosts offering those very things. Their bread and butter, their primary revenue, comes from service fees charged to both guests and hosts for bookings. They're literally everywhere, operating in over 200 countries and regions. Interestingly, 100% of their reported segment revenue comes from these service fees for stays and experiences, with about 45% of that from North America and 37% from EMEA. So, given this cautious outlook, how big of an impact are we talking about? This is where it gets interesting. The narrative specifically points to margin pressures due to increased investments and challenging year-over-year comparisons. This directly hits Airbnb's profitability. Now, Airbnb actually has a fantastic gross margin, sitting at about 83% trailing 12 months. This means that when their operating expenses, especially from these increased investments, go up, it directly impacts their operating and net margins. We've estimated that upcoming quarterly operating margins could compress by 2 to 4 percentage points. Let me break down how we get to that 20% impact on earnings. Imagine their operating margin was around 15%, which is consistent with recent performance. A midpoint compression of 3 percentage points means that 15% could drop to 12%. That 3% reduction from a 15% base translates to a 20% decrease in operating profit. Assuming their interest expenses and tax rates stay relatively stable, this 20% hit to operating profit is projected to result in an approximate 20% reduction in upcoming quarterly net earnings. Now, I want to be clear, our confidence interval for this impact is from a -13% to a -27% reduction. This range is moderately wide because while the direction of impact is clear, the exact magnitude of these increased investments and challenging comparisons is still a bit qualitative. So the 20% is our best estimate. To figure out what this stock is really worth with this narrative in mind, I'm looking at it from two angles, using data I pulled from finviz.com. First, a discounted cash flow model. For this, I'm assuming a growth rate of about 10.9%, a discount rate of 9.5%, and a terminal growth rate of 2.5%. Based on the company's financials, our base case DCF value came in at about $82.74. But when we apply our narrative's estimated impact, that potential 20% hit to earnings, that DCF value drops significantly to roughly $60.40. The second method is a bit simpler, a PEG-based valuation. The PEG ratio compares a company's price-to-earnings ratio to its earnings growth rate, giving you a sense of whether you're paying too much for growth. Using this method, our PEG-based fair value for ABNB comes out to about $65.21. So, comparing these figures to Airbnb's current price of around $130.50, you can see there's a pretty big disconnect when you factor in this narrative. If you're looking to catch this knife, my custom buy levels where I'd start to consider it are much lower, $102, $90, and $85. So that wraps up Airbnb. But remember, this is not financial advice. It's just our analysis based on the data we have. Always do your own thorough research before making any investment decisions. Thanks for tuning in to Am I Catching a Falling Life? I'm Dave, and I'll catch you next time.